Well, good morning, folks. Welcome to TriggerCharts Friday morning updates, the pre-market rundown. So hopefully we could get to the bottom of some of the things that are going on right now with regard to the markets and what's happening. But we have, in the meantime, some things to go over, talk about some of the things that happened during the week, etc. We're also going to get to some of your stocks, some of your ideas on your particular instruments that you trade, so make sure to put those into the chat as well. Everybody can see me okay? Everybody can see the charts okay? Do a little kickback here and tell me what's going on here, and we will get going on this in a second. Let me kind of just look at a couple of things here. All right. There we go. All right. All right, great, guys. All right, let's talk about what's going on. First of all, let's take a look at, of course, these important disclaimers, some of the things that we need to take a look at in terms of what's important to remember, that this, of course, is just for educational purposes only. This is nothing more than a guide to our indicators. Of course, investing involves a considerable amount of risk, so make sure that you are understanding that and take a look at this, read this whole section right about here on that, okay? So now that we get that out of the way, let's talk about what's going on during the week. And here's our outline we're going to talk about today, because a lot of things going on today with the markets with regard to the jobs numbers, seeing some headlines about trade and China. We're seeing a variety of things that are going on with regard to what's happening with the potential for a rate decrease or a rate cut. So right now we're seeing that futures on the Dow are up about 50 points. We're seeing that the S&P futures are up about 7 and the NASDAQ up about 27. That's after we saw a major dip. Of course, the June is starting. Bulls want some vengeance from where they were after May was the first down month of 2019. And that's kind of interesting because we saw this really nice move higher after that plunge back in December. And all of a sudden, the idea that a rate cut was in the cards really had the bulls going. That the idea was, hey, you know what? We're going to see the Fed with an easy monetary policy, and that's going to bode well with regard to how this is all going to play out for stocks. And stock valuations are much better because rates are going to go lower. So far, we've seen nothing. There's been absolutely no move on this. But when you look at the markets, they're doing a lot of expectation, hope, prayer, wishful thinking that there's going to be a rate cut. Right now, we're seeing that at the June meeting is about a 35% chance of a rate cut. July, about 70% at this point, and another rate cut potentially in September. All this because we're seeing a slight slowdown in some of the wage growth. Today we saw that there was, of course, we'll kind of jump down here, that the ADP numbers on Wednesday were pretty disappointing. Probably the worst ADP private payroll number that we saw through this whole expansion. And we're seeing today that the official number for unemployment, or the employment numbers, came in at 75,000, keeping a 3.6% unemployment rate. Wage growth stagnated a bit, and that's a bit of a concern. We're seeing that manufacturing is slowing down a little bit here, but that's here in the US. The rest of the world is imploding. I mean, look at Europe. Italy is basically in a recession. We're seeing that German manufacturing and all the PMIs around Europe are really coming down very significantly. China, we know what's happening there. And now all of a sudden today, once we saw this bad number in terms of the employment, what happened? Well, a sneaky little leak of information out from the White House saying that they're going to give China a little bit more time on the tariffs, about one more week. June 15th is the date now they're looking for to increase tariffs on a tremendous amount of goods. Doesn't give a lot of time for corporations to adjust what they're doing. Doesn't give anybody much time to adjust anything. But the bottom line is that markets will see this as a positive, that maybe, just maybe, that there's a little bit of wiggle room in this whole tariff game when it comes to China. And of course, we saw that last week, that tariff by tweet came out where President Trump decided that, there's not a lot being done in terms of the border security with Mexico. And, we're going to hit them with a 5% tariff that's going to increase by 5% each and every month going forward until they can get something done. Mexico panicked, got a lot of people to the table, and they did some negotiating, and there's a lot of optimism that something will be done there. So what we're seeing right now is a bifurcated market, right? On one hand, we're seeing that there's a lot of concern about the economic numbers, and that a lot of that is due to the tariffs that are being imposed. We're seeing some really good technicals play out here and play out pretty well, where you can see just where things are going to go, and we're going to show you some of that. As a matter of fact, let's look to the chart to the right here. Well, let's take a look at the area. Everybody can see my screen that I'm sharing here, right? I'm sharing this pretty well, right? Okay, so right here we saw, when we look at this as a 200-day moving average of the S&P 500, used by the SPY, we're talking about the SPY here. And what we see here is that there is a significant magnet. We talked about this about 2 weeks ago, that we dropped through that 50-day moving average. And of course, that we did get that magnet down to the 200-day moving average. We did get some support, and we drew that in with an altimeter, which is a TriggerCharts indicator through the Commander series. Matter of fact, I want to launch a quick poll here. And do you use moving averages? Is it something that you really utilize, whether it's on an intraday or a long-term chart? Is it like, the 50-day, the 100-day? You can use the 30-minute, whatever it is. But do you really look at moving averages when you actually are trading? Is it something that's important to you? Because I want to know that, because one of the things that moving averages have, and the thing that I see that's of interest, is that moving averages really, if you think about it for a second here, moving averages have no meaning. It's just it's a line that's drawn over a period of time, takes into consideration one thing: price. But price can move for a lot of different reasons, and it gives us the closing value, and then it averages out and moves it forward. And of course, there's simple moving averages, there's exponential moving averages. But what I'm talking about here is, it's very interesting because people use them because they believe that other people use them. And that makes a lot of sense, by the way. Totally makes sense. Because what happens is you get agreement. You get this idea that everybody is going to be looking to play a bounce off a, let's say, a 200-day moving average. Well, that's good. And therefore, if they do, and if we know institutions doing that, I'm going to play along well as well. So let me share the results of this particular poll here. So about 80% of you said that they use moving averages, and about 20% don't. And that's probably about the old 80-20 rule. One of the things that I think, when I look at this kind of situation, we saw the bounce off, or the blow through the 200 and back up above. What I like to look for in moving averages is actually slope. Slope, I think, is the most important key. So we see that the 50-day moving average right here is moving higher, right? We see that the 200-day moving average is this blue line right here, and that's starting to sag a little bit. The 100-day moving average is also moving up. So the good news is that, generally speaking, the shorter-term moving averages are, in fact, showing a favorable condition. And oftentimes what you want to do is look for a play for resistance or support when it comes to moving averages, when it is sloping in a particular direction. Like, for example, if the 50-day moving average is actually sloping down, you don't want to really play that for support, because basically if that keeps on moving lower and lower over time, you start sloping lower and lower. What's going to happen is that the support will be lower and lower over time. So look for this slope of the moving average. I think that's the only thing that I really like to look at when it comes to moving averages. In terms of what's happening here, I think that right now we have some interesting economics that are out there that are sort of pushing and pulling. It's a bit of kind of a two-headed llama right now. And we see this push and pull when it comes to the markets right now. And one of the things that I think is really driving the markets is the Fed. And I think that this is really what we want to look at here. It's this carrot, right? Here's our investors on one side that are the donkey, the ass, the mule. And on the other side, they have this carrot right in front of them. The Fed rate cut is kind of driving them, saying, oh, look at this, we're going to get a rate cut. And that's why we're seeing that on a regular basis. Every single day, we see another Fed official coming out with another, commentary of, oh, we think. And what are these commentaries really? Between me and you, what are they really? They're trial balloons. Let's see how investors take this. Is it going to be beneficial? And if, in fact, we can bring markets up, because one of their mandates, which is a silent mandate, is, of course, asset prices. If, in fact, we can bring prices up, maybe we won't have to be so aggressive, because if the market's doing well, if confidence is doing well, usually what happens is that the economy follows that. The same thing happens if the economy is starting to stagnate and markets are falling and confidence gets lower and retail sales start to suffer. What do you see? Of course, everything starts cascading, and they really need to step in. So what they're doing is they're softening their stance, the need and necessity for them to actually increase rates. Think about it for a second. It's a game. It's a game to try to make sure that investors are holding tight to what they say is also a little bit of a test of markets to see how they're going to take this. If we do drop rates, our market's going to really like this. And if we keep mentioning it over time, we get markets used to it. And over time, what happens is when we actually do the cut, or we actually do the hike, or we actually don't do anything, markets aren't really that disappointed. And if in fact we do disappoint markets, we probably brought them up to begin with ahead of it. So what are our themes right now? I think the theme right now is potholes. What do I mean by that? Well, we have to watch for things like economic numbers coming out. We see that CPI, retail sales, import-export prices next week. We saw a pothole today with the employment numbers. We also have potholes like the G20 meeting where supposedly some kind of an agreement of whether or not there's going to be an increase or not, or an agreement or a postponement of the China tariffs are going to come into play. And then also we have political potholes like the calls for tech companies to be broken up. We have tariffs. So a lot of things that right now we have to, it's kind of like maybe potholes. We could possibly even call them landmines. But right now, that's what's going on. I want to mention that you also make sure that you're on our mailing list. You go over to TriggerCharts.com, sign up for the mailing list to make sure you get all the updates on when the webinars are. If you did register for this webinar, this is going to be the registration through the month of June. So you get reminders on a regular basis as well of when that's going to happen. We're going to talk about some of the earnings related stocks. We're going to talk about some symbols as well. In a moment, I'm going to ask you also that you can put in the chat some of the symbols that you're looking at. One thing I want to mention, one of the special offers that we're going to do for anybody that is desirous of subscribing to an indicator through TriggerCharts on TradeStation, that we are giving away, yes, giving away, we're giving away a 4-hour training session that is online. It's valued at $199. That's what we usually charge for it. Any new subscribers to the TriggerCharts Commander Series, not trials, you could try it for 10 days free, but any new subscribers that go over to TradeStation at the trading app store and subscribe, we will send you the links and the passcodes and all the information to do a 4-hour training course, a kind of a personal coaching session online that you can replay at your convenience. So I think Kevin's going to pop that in there and put the information about that on how you can do that. Just email us when you do subscribe. You can go to the trading app store, and let me bring that up here real quickly. And let's see. There you go. And you just go over to the trading app store, and you can just sign up there. There you go. All right, let's get into some of this here. I got lots of things set up for you today that I thought were kind of interesting. So what you're looking at right now is somewhat what the TriggerCharts Commander Series looks like. And what I put on the chart today, what I want to look at is the radar. The radar is this multiple line view of exactly a granular view of a market profile. And I wanted to use this because I want to really focus in on the yellow lines. Now, oftentimes we're looking at simply, let me kind of bring this up. Oftentimes what we're looking at is simply these 3 lines, right? The resistance, the high volume node, and the support. This is what we look at because it is a derivative of this, which is the radar. And what we're looking at here is the important areas of interest when we look at the radars. And right now, if you look at where we are, and I'll take a look at that and just kind of give you a quick area to look at right here. You can look at where that S&P has come up right into the resistance line and it stopped dead on that. It overshot a little bit yesterday and came right into it. Market's going to be open in about 15 minutes here. But basically, what we did see was that we're coming right into the support line. In addition to that, when you look at where we are right now, we can draw a quick line here. It looks like right across there is a, let me bring this down a little bit, at the same level, there's a yellow line. Yellow lines are really important. What the yellow lines mean is that within this range of date, within this radar or market profile that we're looking at, this is the highest volume nodes. Sometimes there's 1, sometimes there's 2. For example, in this area here, when you're looking at the area on the screen, when you look at this radar, what you're seeing is there's only 1, right? There's only 1 yellow line in here. And when you look at, for example, the this one here, there's 2. There's two radars, one radar, but two yellow lines. Here's another two. But what you see oftentimes is when there's two lines, two yellow lines, in between those are the areas that we look at when we find that are really interesting. Those are holes. Those are areas that we see fast movement through time. Because when you look at volume and you look at price, one of the key things is where are traders laying their marks? Where are they putting their line in the sand? Essentially, these yellow lines are the line in the sand for the markets. So consider that as an important level. That's the S&P. Let's take a look at, let's kind of buzz up here on this. Probably the same look a little bit as you see the Dow Jones Industrial Average. This is the YM. Crude oil has been in just an absolute horrible place. Now, one of the things I want you to look at here, I really want you to focus on something. This is really important. If I can get my little ability to draw something, I will do so. But I want you to look at the area right here. Look to the left of that. I want you to really focus in on where this is playing out and where you have the levels that are purple right here in our radar. And when we look from right to left, always look left. When we're looking to the left, what you find here is something really interesting. There's nothing here. Where do we have the next level of interest? Probably somewhere down about where we have this line drawn here. So it's probably right where we are at about 51 bucks. But you know what? Right now we have some resistance. We have the potential for a snapback rally, of course, on oil going through that hole. Because when we look from right to left, there's really nothing in this whole area. And we're seeing that confirmed by the fact that very little volume. In particular, if we do get above our line right here, see this 54, 53 that we drew, because that's where there's that empty space in our overall level. In addition, when we look back to the left, there's something else that's important. We're seeing that there's a yellow line here. So when you look at these, it's really easy, and I like it easy. I don't know about you. I like to make my trading day easy. I got a lot of things going on during the day, right? You do too. Maybe you're a full-time trader. Maybe you're doing this part-time. Bottom line is, you can't have all these things on your screen messing you up, looking at, oh, what do I look at? What do I do? What am I finding? You want to make it really easy. So again, while the radar does clog up your screen a little bit, it is really easy when you look at this simply with our altimeter, because the altimeter will give you the same levels that are looking across. You know that if we go by 50, 54, 53, even though we did a short here by showing this yellow line and back to a red, very easy. Red is a short, green is a long. We got out of that just today. You would have been short somewhere about 57.80, and you would have covered your position about 52.92. Not a bad trade for oil, 5 points on oil. Think about that for a second. Let's kind of go down a little bit. I want to look at gold for a second here because gold has been breaking out. And one of the things, I drew some things earlier on here today. I like to use my drawing tools, and I really hope that you use these two very simple drawing tools inside of TradeStation. But reason being because you can kind of start connecting some numbers and connecting ideas, giving yourself a real good basis for where to go. There's the futures on gold. I think this is really interesting. So this morning we saw that the dollar started just falling off dramatically after a disappointing number in terms of GDP. The dollar's been in employment. The dollar's also been coming down very significantly recently due to the fact that we're seeing that there is a concern about GDP, the potential for a rate cut, all the things that are going on involved in the markets right now that you well know about. I drew the first circle here, and when you look at this, we can find that this first circle that we're looking at over here is basically an area of real interest because there's nothing there. Looking again from right to left, we have nothing that we drew. Well, there's some price action over here, but there's nothing that we drew inside of this whole area. I think that was really interesting. We look over to the left here a little bit further, and we can see that there is some really good lines that were drawn. So I then drew a horizontal line and connected it. If we got above that level, this is going back to February, there's an opportunity for gold to break out. So gold is kind of riding up here. We got a nice call of going long gold back when it was about, we'll call it right about 1,300, currently trading at about 1,346. We saw that there was an opportunity for a fast zone or a hole, and that gave us the green light, so to speak, as we saw this automatically drawn in your charts. Here's the thing that's beautiful. Why waste time trying to scratch your head? Think about things. There's a daily chart. You can use this on an intraday chart as well. But what we gave you here was a real good heads up that gold was breaking out and something important was happening. Again, you got to move about 40 bucks on gold. How would that sit well with your P&L statement right now, right? And then we saw that this breakout right above this level, which it did just this morning, is breaking out. We're seeing that gold is long for 3 bars in the short term, 60-minute, 3 bars on the 90, long on the 240, long on the daily, and weekly long now coming in. This is a great setup for gold. Very easy to look at. Again, everything is available. We have a lot of great training. There's a great training. Let me see if I have that. We have training videos over on TriggerCharts.com. If you go to TriggerCharts.com, I'll type that in for you. Charts. If you go to TriggerCharts.com. Yeah, thanks, Kev. Kevin's helped me out today. He's a co-founder of TriggerCharts. And if you go over to TriggerCharts, there's a lot of videos. We also have a YouTube channel, by the way, that all of the recordings that we do on Fridays will be there. So you can kind of check back and see what we talked about each week and how it played out moving forward. Let's take a look at a few other things here. Stocks of interest. A lot of people ask me about this stock. You know, for the last several months that I've been doing either the Friday morning market briefings over on TradeStation, hosted by TradeStation, or now we're doing the pre-market rundowns here over on TriggerCharts. A lot of questions came in about NIO. And a lot of people were really concerned and looking at NIO saying, hey, what do I do about this? A lot of excitement, right? There's the electric car company, the Tesla of China. What do I do with this stock? We talked about this, said there was nothing. We asked you, what do you think about NIO? Everybody came back and said, downtrend, looks awful. But look at this. We see time and time again, we set a short here at 380, currently trading about 266. Not a stock that we would play with. But one of the things I really thought was very interesting about this was, if we kind of build this up, this is the aileron indicator, another indicator that you can put on your charts from TriggerCharts. Basically, it's a momentum indicator. We blend together about 14 different traditional and very proprietary indicators to come up with a momentum play, to find out where we are. And when we look at this, when you combine where we are here from a consolidation standpoint, from a support and resistance standpoint, looking at holes, we see that when you come back to this area back in March, pretty significant amount of momentum to the downside. There was really nothing here that would hold us into this trade. And bottom line here, as we can see and where this went from on this, I mean, there was nothing here that was good, right? You look at this downtrend from $8 down to 260 on what's supposed to be a pretty exciting area. Another chart that we picked up, I thought this was really interesting, okay? Currently down about 9.5%. This stock has a lot of problems. Let's just get that straight. This stock was involved in the drug, the opioid issue. We recently saw that the CEO stepped down. Stock dropped from about $5 down to 77 cents. You know, kind of peel this back a little bit more. You know, it was back $11 back in September of 2018. But what I really wanted to focus in on, I'm going to bring this up pretty big. I want to show you this. First of all, trading penny stocks is very dangerous. Let's get that straight. We all agree with that, hopefully. But what I wanted to show you here was we have a classic hole, and I want to really show you this in the aspect of where things play out in terms of how to look at something, an educational component. Again, I'm not recommending this stock. I just want to show you this from an educational component. What we saw here, look at this yellow line here. You see this yellow line? I'm going to highlight this here. And look at this yellow line right here. The yellow line extends from April 22nd all the way through to June, where we are today, actually. And what we're finding here is a lot of level of support, but where we also have is a very bizarre looking, really strange looking radar. This radar breaks. There's nothing. There's a hole here. See this hole here? Obviously, we saw a gap down after some news came out. Right now, the play on this is if, in fact, we can get above the area of interest, if we can get above the area that we're seeing in terms of an area of a hole. And where is that? Well, it's drawn here, but let's kind of really, let's hone in on that. If we can kind of get above this level here, about $1.90, which yesterday it tried to do, and it failed miserably. Currently trading at $1.04. We can get above $1.90. What do you have? You have the potential for a move up to about $3.50 to recapture some of that. That's a nice little move. You know what I'm saying? That's a nice move when you have right there. So when you look at charts and you're thumbing through charts and you're kind of going through and just tabbing down, looking for where the opportunities are, what I find here is that you really get this opportunity where there are holes. That is the magic bullet. But you have to be patient sometimes. you definitely have to be patient, because what happens here is you're not going to get this overnight. There's going to be a lot of back and forth. Would I have taken the trade here, right about here? Probably not. Excuse me. All right, let's start again with this. This is getting messy. Would I have taken the trade, here above this level of interest? Possibly. You could have kind of got $1.23, knowing you could have played it possibly this level. That's exactly where it went. Look, it went right to that point. No guessing. We have Mexico also all over the place. We saw that the tariffs obviously are hurting them. We saw some drop down here. If the tariffs don't go into place, and we see that there's a postponement probably going to happen this weekend, I would expect Mexico to kind of shoot back up a little bit. What do we have here? Here's another area of interest, Ionis, another, I don't own this. Ionis is the name of the stock. I don't own it, Ionis. What you have here is another classic hole situation where you have an area of interest. The potential for this stock to drop down is very high. Currently trading at about 63.50. If it drops down into the, below this level, I would say about 63.55, which it is approximately right now. It looks like an interesting short candidate. Costco reaching approximate new highs. Nice consolidation. I'm going to take off the radar right now. Clean this up a little bit. Nice consolidation. We've had a nice run of momentum, a couple of dips down, but really nothing of significance. Starting to peel back up again, get across to all-time new highs. This is where we're kind of sitting right now. Here's another gold stock I thought was really interesting, Kirkland Lake. Take a look at this, going back to a long time. Basically, you're seeing that there's a significant amount of movement from $10 back in 17 to where we are now at 38. That's good. GameStop, just a disaster. It's interesting because if you look at GameStop, we've had shorts pretty consistently. Some long positions that were called here, but this is what I was really focusing here on the bottom. If you look at this and you really just take a look at what's happening in terms of, I'll draw to the box here, this area on the bottom, it's not showing anything good. So you kind of take both things into consideration, support, resistance. You also look at where this is in terms of its overall levels in terms of the momentum. That's interesting. SFIX had a really good day yesterday. It was up about 30%. Interesting levels right where we are now. Kind of, look, I just put my cursor right there because I was looking for this level here, this little island area. And that's where it stopped dead yesterday. Very easy to do. Again, the altimeter is a really easy way. It's a very easily color-coded with the autopilot, which is where you're seeing the coloring. DocuSign came out with earnings. Currently trading at, where's it at now? 47 and change. Probably has some resistance back up to about 48.52. Bit of a hole to the left here, nothing happening. Beyond Meats, it's an IPO, trading at 129 today. Fake meat, very interesting. Zoom Media, also an IPO, so we're not gonna see much here. Trading up about 18% this morning. We have a couple of minutes for your symbols, if anybody has any. I wanna mention again that, of course, if you do go over to the TriggerCharts website, you can check out all the videos that are available. And if you want to subscribe, 10-day free subscription available over on that. We got the same Qualcomm. Everybody likes Qualcomm. All right, we'll get to that. Qualcomm's in nowhere land. Qualcomm has nothing good to talk about. It's got to get off of this ridge. See that ridge right here? It's got to get off of this ridge. Otherwise, it's going to fall right back down to about 59, in my opinion. But probably right now with all of the antitrust issues that recently brought up. And by the way, if the same people are bringing up the same stocks every week, I'm assuming that you're holding these stocks and not trading them. So therefore, it doesn't really matter what I tell you. If I tell you that it's a good stock, a bad stock, on levels, off levels, whatever the story is that we're talking about in terms of educational components of this discussion. So, the thing is that I believe that there is some upside, but probably up to about 73 in terms of what our charts are telling us here, 73 on the button. And then, of course, looking at 66 on the downside. Netflix, somebody asked about, and then we'll kind of close it up from here. Netflix got a bit of a drawdown. We saw that of course, the areas of interest, that we saw previously in terms of Netflix, looking at it as a tech stock. Right now, Netflix has really good support, about 342, I would say. If we just draw some lines straight across, simply just take a tool, draw some lines, 341 and change. The upside opportunity here right now on Netflix, kind of where it is right now. A lot of lines, a lot of resistance. Got to get above this number, 358, and then you can start seeing some upward movement. Big consolidation on Netflix, though. If you take a look at this, right, we got this big consolidation area on Netflix. So, consider that. And, I just think that's probably something to kind of consider. Last stock, Atomera. I don't know if I've ever looked at this one before, so it's a fresh look at this. You got an interesting flag pattern that's developed here. I do like that. And you're up in an area that does see some potential. Downside risk on this is probably, I would say, down to about $4.15. Upside, you got to, of course, pass this level. I would say that you got to get past about 515. Then you can see some zooming. Moving along. I thank you again. Go over to TriggerCharts. Go over to TradeStation. Check out everything. We'll be again here next Friday. Tell your friends. Tell your family. Check out our YouTube channel as well, where there'll be this replay. Thanks so much for joining me today, and we will be here next week as well. So we'll talk to you then. Thanks a lot. TriggerCharts.com. See you then.